continue to do so, and I'm very excited about this. Welcome, everybody. Thank you so much for coming along and attending this webinar. I think it's going to be very fruitful, going to be very powerful for you. It fits right into what we do. It should be fitting right into what you do. I'm going to assume a lot of you are PNC agents, probably, maybe PNC agency owners. So you want to get this strategy down. And let me just jump right into it. I'll go into, rather than describe what I'm about to say, I'll start saying it. So mortgage protection, a fresh approach for better results. I'll just really briefly go over the traditional mortgage protection, what that is, what that used to mean or typically means, and how we approach it, and why we think it's so much better and going to do well by you. So what is mortgage protection life insurance? Good old-fashioned, or maybe not so good old-fashioned, mortgage protection insurance, which I'll go ahead and refer to as MPI throughout the presentation, is a specialized type of policy, and it's specifically meant to pay off the balance of a mortgage. So you take on a mortgage and you get the MPI to take care of that. God forbid if something were to happen to you and you pass away before the 30 years or whatever the length of the mortgage is up, it will pay off your lender. That's a key point. Your lender is the beneficiary. It's not your family. Yeah, they get a home free and clear if something were to happen to you, but the beneficiary on this coverage, on this policy, is the lender, and it's typically a decreasing death benefit, decreasing face. The face amount lowers as you pay down the mortgage because it's specifically just paying down the balance. So the more you pay into your mortgage throughout the years, the less this policy is worth. And by the way, you are paying the same level premium monthly. Um, on the other hand, a term life insurance, pretty straightforward, simple stuff. Believe me, I know you guys know most of this stuff. I just wanted to touch on it real quick. It has a level face amount. It's going to be level throughout. We'll make the assumption of a 30-year term for the 30-year mortgage. It's level face the entire way. So the death benefit stays the same, and it allows your family more and more tax-free benefit as you pay down the mortgage debt. So the more you pay down the debt, the more is left over for the beneficiaries that you really care about. I'm assuming, of course, you care about your wife and kids and family more than you care about the lending institution. Um, if I'm wrong, I hope I'm not wrong. It can be used for any number of financial needs. So there's a lot more flexibility to it, not only paying off the balance of the mortgage, which of course it will do, but also education for the kids, if need be, living expenses, your quality of life once, especially if the breadwinner of the family passes, can be maintained if you have the right life insurance coverage. So that helps, or anything else for that matter that may be needed. So completely flexible. It's up to the beneficiary as to what they do with it. Tax-free benefit. Premiums and underwriting for the two. MPI, again, the mortgage protection insurance policy, premiums remain level as the face amount of the policy decreases. We talked about that. The death benefit is paid to your mortgage lender. The MPI is usually guaranteed issue with no medical exam, so it's convenient. And if you have health issues that would preclude you from getting a fully underwritten plan, like a term policy, okay, MPI may be the right or the only choice for you. And again, it's convenient. I typically, honestly, would not recommend one do that unless that is the case. And then even then you want to talk to a good licensed life insurance agent to see what your options really are, and expect to pay more for the MPI. The rates, it being a guaranteed issue, tend to be higher. I was trying to get a real quote for this presentation, a current one, but suffice it to say, without giving them a bunch of information and pretending to be an applicant, I wasn't getting too far with that, other than to say, I'll give you the numbers in a bit as to how it compares to the term. Term premiums also level, as is the death benefit. We talked about that too, which is paid to your designated beneficiaries, your spouse and family, traditionally. Term is often fully underwritten, So with good health, you may qualify for the very best rates and possibly even an accelerated or instant process. These days, most of the carriers offer accelerated underwriting. So that in some ways is going to be similar to the MPI in that it won't require the jabs and labs, the parameds and whatnot, so you can get through it really quick. Some of them even offer instant decision. So as you submit the application within an hour, you can find out if coverage is going to be placed. This is just real quick, just a visual of what it looks like as I just really wanted to put this in here for this purpose, that here's the level term, 30 years, 500,000 in coverage, whereas if somebody has 500,000 in an MPI, it goes down to at the end, it's worth nothing, and it never goes to your family. It always goes to the lender. And if you're, I don't know, if you're into it to a certain degree, I was gonna click on something. I forget where it's at. At some point, it's worth only 100,000. I think 20 years into it, it's 100,000 to your lender, and whereas the term would still be 500,000 paid out. So 400,000 of that would go to your family. The 100,000 goes to the lender, pay off the balance, and you're good. That's just a visual. I know we've talked about it. The why and the who. Um, Home ownership in the U.S. is on the rise. Believe it or not, more people are trying to and actually accomplishing home ownership in the U.S. So it's going up. Mortgage balances are at record highs. Shocker, go figure. So we know that that is one of the things that you can count on, is that at least in most markets, the cost of homes goes up, the value of homes goes up. That means the mortgages are going to be higher. Most families, if you're in this business for any length of time, you know, are woefully underinsured or even sometimes unprotected altogether. So you want to get in front of these people. And your goal is to achieve the status of a trusted advisor and make sure your clients are properly protected. I talk about this a lot because a trusted advisor is way better than being an order taker or even a everyday walking around life insurance agent. Trusted advisor is what gets you business, gets you retention, and gets you referrals. So the who, new homeowners looking to protect their investment. Hopefully savvy investors that know that home ownership is a good investment in most markets. I'm in California, so it's phenomenal, and they need to protect that investment, make sure they're passing along a home to their family as opposed to a debt. Families that are refinancing their mortgage, we've seen that a lot just recently. The rates bounce all over the place, and when they go down, people jump on board to go refinance. And so that's a good opportunity to talk to those about getting life insurance. If you're writing homeowners policies, you need to ask, you know, once you get done with that, well, what are you doing for life insurance? And then let them answer you open-ended question, drink in all the information, and then respond to it. I will also say you'll want to definitely conduct annual surveys. I know how much retention means to you guys, and that's the key thing. You want to make sure you're doing the best at. That's the stat you want high. Any of your clients that have the life insurance piece, their retention is in the 90s, 95%. So that's what you want. You want sticky business. So it serves your clients well to get them well protected. It serves you well as an agent. And again, it will earn you the referrals and your positioning, if I could speak, yourself as the trusted advisor that they will respect and appreciate.